Bank of America downgraded it to neutral, saying the stock has outperformed year to date, suggesting that the trend now is at risk. But our next guest has a different opinion. Barton Crockett is senior analyst for Rosenblatt Securities. He's upgrading the stock this morning to buy from neutral and raising his price target to 189. That's a 26% upside. And thanks, Barton. Other analysts actually lowered the price target. So where do you think you disagree with the Bank of America analyst, Barton? And was this, in your view, what would you call it a cut in production? And would you say that it has anything to do with demand? Any indication that that's weaker than expected?
Yeah. Well, I'll start with our work, which is we did a consumer survey in the United States, and we found very, very strong consumer interest, not just in iPhone, where some 29% of people we surveyed in this country plan to or think they or already have bought an iPhone 14 of adults, but that 2/3 want the pricier models, and very strong preference for the priciest one, the iPhone Pro Max. That coincides with very strong interest in the new Apple Watches, with similarly there a very, very strong preference for the very expensive Ultra Watch. So what we think is we're in an environment where these devices are more important to people than ever before. They're willing to pay more for them, reflecting the importance and reflecting Apple's ability to come up with features that people like. One thing that is new in this iPhone 14 series is this emergency SOS satellite communication safety feature. Very, very big interest in that. We found that over 80% of respondents found that very or somewhat appealing. 38% thought it was a reason to think about buying an iPhone. So I think that we went and looked at demand. A lot of people are focused on supply chain, and we looked at demand. As for that Bloomberg report, for an environment of a positive mix shift, a rising kind of ASP, you can be flattish on units and be pretty happy with the revenue outcome. But I'm not sure that Bloomberg report is the end story. It's been a number of kind of anonymous reports about what's happening in the chain, and they seem to, at certain levels, miss the big picture. I think that these devices are something that consumers really want, based on our survey work.
So Apple has performed better than almost any of the FANGs or even just technology in general. It's been a real sort of not a leader down, but a kind of a leader in maintaining a lot of its of the gains that it's seen in recent years. Mm-hmm. Is that good, or is it got further to go? I'm asking you a question, and you just raised your price target. So I assume that relative strength is a positive in terms of whether you should own the stock.
Yeah, I'm less thinking about relative strength and more just the fundamental ability to grow the business. I think that demand for pricey devices, pricey iPhones, pricey Apple Watches, is a setup for an ability to grow revenues in an environment where that may be more and more difficult for many companies. Apple, I think, is rising to the cream of the crop in terms of what consumers want to spend money on in this environment. So on a relative basis, I think you should preference it. In terms of valuation for Apple, the multiple is down from some higher levels that it's had in recent years. It's up from where it has been many years ago. But at this level, I think the premium's not crazy, and it's something that I think it will tend to attract as the device and the thing that people are most willing to put high on their want list in the world as it is right now.